What about commercial real estate? This sounds like this would be the last thing that the commercial real estate market would need.
Yeah, I mean, commercial real estate, I think the challenge with commercial real estate is that it's not all that viable at 4% yields or 5% yields or 6% yields. And so I
So
think
maybe it doesn't matter as much
so
because
the
anything
question
is.
is sort of the marginal impact. I think probably there is not all that big. I don't want to
Hmm.
it matters whether the yields are 4 versus 6, but the big problem is that no one's going to the office,
Yeah.
as evidenced by
But like the idea of extending and pretending, if you get those rates down, if they were going to go back down to 2%, yes, you still have a problem. You still have the distressed guys that have to come in and you have a liquidation that could probably take, like savings and loans, someone refers to it, decades to unwind or repurpose. But now the idea that you're in a different rate regime can only make that, I think that situation more difficult.
Yeah, that's right. I think the main thing with the CRE world is that it is almost entirely on balance sheet loans.
Yeah.
And the one thing that the banking system is really, really good at is extending, pretending, modifying, terming out,
Restructuring.
restructuring, like that whole world. Like if there's one thing bankers are good at, it's not necessarily making loans, but they're darn good at dealing with bad loans and
They have a lot of experience.
they have a lot of experience dealing with that. And I think there's a lot of regulatory relief
Yeah.
that exists for them to not necessarily resolve those things immediately. I put out something a couple of weeks ago. Since CRE like blew up, let's say everyone started to talk about it like early last year. The banking system has earned about $60 billion in NIM from CRE, and they've lost $600 million. So that gives you a sense as $60 billion of NIM, $600 million of losses, charge-offs that have occurred. That gives you a sense. Like this is like watching paint dry. It is not. People who relate this to the financial crisis. Not at all the financial crisis. The
No,
financial
because it's
crisis.
not that was the wheels coming off the entire global system. This is a problem that they know how it's painful and painstaking, but they have done this before in many different areas.
Exactly. And banks can. The whole cleverness of a bank is that they earn the income today and they take the losses over an extremely long period of time, and that allows them, if the losses are big enough, to out earn through their NIM on other assets, on other loans, which to be clear are resetting. We have to remember that,
Mm-hmm.
like those things are resetting. NIMs are actually fine. They're staying in the 2.5-3% range. 3.5 for some of the smaller cohorts. Those are decent NIMs. They can absorb a lot of losses with NIMs like that for an extended period of time. And so it doesn't mean that are banks going to be making money hand over fist? Probably not. Are the ones that are concentrated in these assets going to, are their stocks going to be fantastic? Probably not a great stock pick. Depends on what's priced in. But, you could easily see the stocks kind of being, bad performers for an extended period of time. But that's very different from this is the thing that's going to bring down the economy.
That's a great observation because we get a lot of questions of people worried about commercial real estate. And I think that that's a really, really sort of accurate description of banking. NIM is net interest margin, everyone, by the way, the amount of money bank makes on earning on its interest and loans.